Hey, Dan Passarelli here. Well, every once in a while we get a 3-day weekend. The market's closed for, some holiday usually on a Monday, sometimes on a Friday. And boy, it sure is nice to have a break from the markets and to be with our family and do the things that are important, right? But the thing is even though it's nice to get a break from trading, and by the way, just as an aside, those breaks end up making us trade better because we get a little bit of relaxation. But it can promote some problems potentially for option traders. There's some advantages and disadvantages when it comes to those 3-day weekends. Specifically, what I'm talking about is theta. Now, theta is just simply a measure of time decay, which is how much the option loses as each day passes. And if you look at this option chain here for Apple options, you see these 140 calls have a 59-cent theta. That means as each 1 day passes, these options get worth about 59 cents less. Now they might make or lose money as on Delta as the stock goes up or down, or might make or lose money on Vega, but as time passes, they get worth less by 59 cents. These happen to have a theta of 19 cents. These happen to have a theta of 14 cents. Now that's as each 1 day passes. But theta is counted on a 7-day-a-week calendar, which means when we have a regular weekend, 3 full days of theta come out: Friday, Saturday, and Sunday. And when we have a 3-day weekend, that extra day off, that's 4 full days of theta. If the market's closed Monday, the option will decay 4 full days: Thursday's day, Saturday, Sunday, and then also Monday. Now, how do we prepare for this? Because it can be a big deal having 4 days of theta working against you if you're long options. So one of the things that we have to know is that theta doesn't necessarily come out like exactly right at the end of the day, and the market opens exactly less than that, the next morning. The way theta works is it comes out sometimes during the day. On slow days, it tends to come out a little bit earlier. On busier days, it tends to come out a little bit later. And as we approach a regular weekend, the weekend starts coming out as early as Thursday morning. Definitely by Friday morning. And sometimes by the end of Friday, the options could be trading already on Monday's days. Now, when there's an extra weekend, that time decay can start coming out even earlier, maybe midday Wednesday. And it comes out at a faster rate on Thursday and for sure on Friday. So we always want to take a good hard look at any long options positions we have as we're approaching a 3-day weekend, because they'll start to lose their value pretty quickly. Now, what if we're short options? It sounds like a really great thing because we get an extra day of time decay. In fact, every weekend we get 2 extra days. On 3-day weekends, we get 3 extra days, right? Well, yes, that's actually true. But, something can happen over the weekend that can cause the underlying stock to move. There's just more time for an event to occur. Now, a lot of times, nothing major happens on weekends, but sometimes it does. So we carry that extra risk, which is the trade-off basically that we have for getting that theta every day. So I wanted to share with you this idea of how to manage theta coming into 3-day weekends. I think it's really, really important to keep in mind always. Once again, this is Dan Passarelli. Trade smart.